Very good morning, everyone. Charles here, FRGNT Daily Chart Analysis, Monday the 22nd of June, 2026. The time is just approaching a couple of minutes to 8 local time here in Milan. So, welcome to a new week. Haven't done a breakdown for a couple of weeks, I think, here on TradingView. So, without wasting too much time, let's get straight to it. So, the DXY. In terms of the weekly outlook, in general, I think that the charts are aligning a lot nicer than they have done in previous weeks and months, to be quite honest. And that is, in my opinion now, as a result of finally we have broken above what was a weekly order block in the market on the DXY, like so. Incorrect color, but you can see the illustration. And having this weekly order block that price was failing to break above on the weekly time frame was actually inciting a bit of conflict based on the technicals. Of course, the technicals as well was indicating higher highs, higher lows, potential higher high, higher low and around this region for the potential higher high that we now see. However, that higher high was taking us into this tremendously large weekly order block where, of course, based on order block and smart money concepts, I was expecting potential turnaround on the DXY. So we had two conflicts there. We had structure based on the weekly time frame, perhaps giving us that break of structure to the highs. However, we also had that weekly order block that price could well have taken price towards the downside. Nevertheless, we have now had a weekly candle finally close above that weekly order block. Therefore, the simple procedure is to get rid of it and understand a much clearer price action and outlook on that weekly time frame, which of course will stem throughout the lower time frames as well. So I'm very much so long bias on the DXY. It doesn't mean that I will not be using the DXY for confluence in terms of shorting the DXY, but my overall bias on the DXY as I use that for confluence with my crosspair positions are overwhelmingly long bias. However, much is still to be said about the DXY because what we always say, what goes up will eventually come back down. So I am indeed expecting after that higher high, I am of course expecting a higher low to be created followed by that higher high continuation. Of course, what this higher low will deliver for us is of course DXY weakness across the charts. And then with that said, those cross pair long positions we believe, or I believe, could be very nice plays coming out of the market. However, based on my longer term thought process on the DXY, moving to those highs, US dollar strength, I then believe the better case scenario would be taking those cross pair shorts once the DXY rolls back to that nice point of interest, once we start to refine this area down, probably towards the end of the week, for those nice looking shorts across EU, GU and EU for good example. So that's what I've got here thus far on the DXY. If we start to refine those areas down, I can show you the illustrations. So we're within this weekly order block now towards the highs. There are two weekly order blocks. However, I don't believe that the DXY is going to roll this far back down. I feel that price is very much so bullish with that bullish intention, and therefore rolling this far back down, even below that daily 50 EMA to this degree, is going to be quite unlikely. So I've moved my points of interest slightly higher, and as a result of those lower time frame structure points as well, I think that supports it quite nicely. That's better illustrated here on the 4-hour time frame. So what we can see on the 4-hour time frame, clearly bullish intention coming out of the market. When I start to zoom out to give you guys a better picture of what's going on, basic price action and structure: higher high in the market, higher low, higher high created, higher low, higher high continuation. So of course we are, as I've mentioned, expecting that higher low to be created. It can of course be created in any point, in my opinion, up until breaking this most recent structure point. So this higher low is most certainly confirmed in the market as a result of that higher high. So I don't really expect price to want to break that most recent higher low, because of course that's going to change the outlook quite considerably. So I've got two areas on the market where I forecast the DXY could potentially roll back down into. There's a 4-hour order block here for a potential move towards the upside, or indeed a little bit lower in that area. So that's what I've got for the DXY. Then I look to refine those areas down even more, because I'm not going to be looking to gain my confidence from that 4-hour time frame, gaining my confidence from the 15-minute time frame, just as if I would trade the DXY as any other pair that you see over here to the right hand side. So therefore I'm looking to refine those areas down. And of course, when you start to go down to the 15-minute time frame, which is my entry time frame, then I'm just looking at structure even more in depth in terms of higher highs, higher lows, higher high. Therefore this area here is confirmed as a result of a higher high being created from that region. However, this 15-minute order block is not based on higher time frame at all. It's simply based on 15-minute price action and structure only. It is still very much so reliable, but for me to take a similar looking position, let's say on a cross pair, I would need to see something quite considerable coming out of the market. I'd need to eyeball some structure points. Based on the optics only, to be quite honest, it's usually enough. Break of that area, pull back, and then look for the long. Or even better, we've identified a high in the market. If we can see price break above that high to give us the indication of what's going to go on through the direction that market wants to take throughout the week, or at least on this intraday perspective, then we'll be looking to see price break that area, roll back to the 15-minute order block that's very much so still available, look for the reaction, and we'll use that as confluence for price on the DXY to take the US dollar towards those highs. And then of course those cross pair shorts that I've been speaking about would be a nice looking opportunity. Of course, you can see better refined areas based on that higher time frame analysis, this 4-hour order block. Again, I would admit that's kind of an order block in the middle of nowhere, but nevertheless we seek to understand what's going to go on. It doesn't mean immediate positions are going to be taken from these areas in terms of my cross pair positioning. However, just looking at the chart, you can certainly see by way of that bullish engulfing candle here on that 4-hour time frame, leaving a 4-hour order block behind, supported highs by now the 4-hour 50 EMA, is looking quite good. And on an intraday perspective, for me, here is the key structure point, because if I have this incorrect, I need to ask myself, well, where was this high created from? Can I say the high was created from there for the high, for a potential higher low, higher high continuation? We have to take all instances into consideration to build that bias. So that's what I've got really on the DXY, and that is really framing my outlook for the week ahead. So very much so, as I mentioned, long-term DXY strength. I do expect to come out of the market from those order blocks that we've just spoken about. However, in the immediacy, I am, of course, expecting that US dollar weakness, as price has now created that higher high, and I have every expectation that price will look to gravitate towards those lows, making that higher low before then seeing that higher high continuation play out in the market in the next couple of weeks and months. So with that said, I won't go too much in depth, but GU is certainly marked up, ready for potentials of the day, as we've mentioned, in terms of looking for reaction. For me to take a long position now on GBP US dollar, I need to have the incentive, or the confluence rather, that DXY is now looking to create that higher low, as we've mentioned. DXY weakness, US dollar weakness, of course the cross pair GBP USD is going to give off seemingly bullish signs as that DXY starts to slide towards the downside. Again, much of the same. I do believe my best case scenario is going to come from a short based on the overall direction and bias on the pound. We can see here over the last couple of weeks and months that we are certainly bearish. And what we will do, or what I love to say, is one line will often do it. Price is being held up in the air. We've now broke below that area structure point. So therefore, after a low created in the market, lower high, lower low is confirmed. So what am I expecting? A lower high for a lower low continuation. Now, when I look to take a long position from here, I now need to ask myself, well, does it make sense to potentially look for a long position from there? In my opinion, of course it does, because I'm expecting a lower high to be formed, which would be me taking a long position on that lower high, and then understanding when to get out of the market when that lower high is created, as I do expect a lower low to be created at some point based on that higher time frame directional bias. So GBP is very much so one of the favorites today. Not really too concerned about taking the longs if they materialize. Of course, I need to wait for some structure points to be broken, but overwhelmingly my short bias is where I'll be looking to take price at some point throughout the week. Euro US dollar, again, another nice looking pair based on the DXY. It does look quite nice indeed. However, some structure points and breaks of structure needs to be shown to me to give me the incentive to start taking positions on the EU. So that's definitely one of the favorites up there as well. GJ, certainly looking at GJ, you can see my alert is already set based on GJ. I like GJ to be honest. Much like we've just mentioned, price was holding at an area in the daily time frame, now broken below. We're now creating that lower high potentially to be created, followed by the lower low continuation. If price is going to roll up to those highs, then of course I'll be looking for that short. In the immediacy, what we can see here is price was on the range on GJ, broken out of that range, lower low created. Now we're expecting that lower high formation for that lower low continuation. Now the question we have is that higher low going to come from this area just here on the 4-hour time frame, bottom left hand chart, or is that higher low going to come from this area, which is slightly higher, which would be of course the much better short position based on our higher time frame directional bias. As you can see, if you have a look at my cross pair, as we start to move higher up on that 4-hour time frame, we then start to roll into that higher time frame daily order block. So we have a lot of confluence in that area looking for the short. At the moment, we still do have confluence based on daily and 4-hour 50 MA towards the downside. However, our directional bias starts on the 4-hour time frame only. So therefore, a little bit more needs to go into the analysis before looking at taking an immediate short position. Now onto the 15-minute time frame. It looks quite nice to be honest. I can see price actually we've made a low from the market, so of course lower high followed by a lower low continuation. The only thing I don't like is of late, I don't mind it so much, I don't like this so much. Therefore I'm not seeing, so at this stage, yeah, price action was nice and clear. At this stage, you could probably get by it, but at this stage, we're not making any further lows from that area to then call this a clear session high in the market, looking for a price to continually make lows from that area. In actual fact, we're looking at a range, and if you head over to the 4-hour time frame, you can kind of just about start to see. If I superimpose this on all intervals, you can see that clearly on the 4-hour time frame. So I'm a little bit hesitant here on GJ to take immediate short positions, but what I am going to expect is price to act in line with a range, bit of manipulation, then I'll be looking for a price to snap back in, allow me that order block up at the highs, and I'll take price back down to those lows. And so long as the risk reward makes sense, and I see that as a nice position despite seeing that range on the 4 and 15-minute time frame. So that's what we've got. UJ, much of the same based on DXY weakness. Can I take a position? Well, I need to get that confirmation from the DXY that we are looking to roll towards the downside. What that could well look like is some breaks of structure points, pull back into an area of interest and take that short position down. So UJ, regardless of UJ coming into a nice higher time frame point of interest, we can see weekly time frame testing previous weekly highs, refined area, daily order block, refine that down even more. If I zoom out for you, we're into a 4-hour order block as well. Where is it? A long way away. Just there, if you have a look. So this is from July 2024. As we scroll across, there we are. Prices in that area now. So it's all looking good. It's shaping up nicely. And then I refine that area down even some more. We have that 15-minute time frame. However, that 15-minute order block hasn't really shown me much just yet. It is at the moment just a high in the market. So for me to take a short position from here, I currently have no right to do so. What I need to understand is my structure points on the way up based on basic price action on that 15-minute time frame. So you see me do this all the time. Higher high, higher low, higher high, higher low. Have we made a higher high? Potentially we're in the realms of making that higher high, hence why taking a short position now is risky territory despite what the overwhelming directional higher time frame bias is telling us. Therefore, for me to then be able to trade at least alongside the 15-minute time frame, because for sure we're not going to be trading alongside the 4-hour daily or the weekly by the time we want to execute that position short, I believe it makes absolute sense to have the patience to wait for price to break some structure points, then price come back up to a point of interest that is left behind as a result of that break, then you may well want to look for that lower time confirmation. So then you're trading alongside 15, you're trading alongside your lower time frame confirmation of bias as well, and then you can execute that short position with confidence. So at the moment, it's looking quite nice. I still need price to develop somewhat before looking to execute a position. Nevertheless, UJ is definitely up there, but needing to see that DXY gives signs of weakness before seeking to execute that short position. AU, just a quick rundown as well. Been looking to short AU from feels like weeks and weeks now, but haven't had the opportunity for price to pull back, unfortunately. And I do see there is potential for a bit of a reversal up towards the area that I do want to short up to. Whether or not I'm going to be looking to take that is another question. I can see where price should go based on my technical analysis, but it doesn't necessarily mean that I'm going to be in that position. I may just have to sit that one out and wait for my better opportunity, which in my opinion is short, coming by way of what is priced at action doing on the weekly, daily, and on the 4-hour. We are very much so bearish. So like I've just explained on UJ, we don't have any time frames telling us we should be shorting UJ at the moment. But here, in contrast, AU, we have all time frames telling us, well, actually weekly, bearish order block on that weekly time frame. Wait for price to pull back, take the short. Daily time frame, breaks or structure, lower low, lower high to be created into the daily 50 MA, supporting the shorts. It looks nice for shorts on the daily. 4-hour time frame, you can reprice action. We've had a low created in the market, potential lower high for a lower low continuation. What I like, although we haven't had a lower low just here, we haven't broke above the key structure area in the market. And again, sometimes by eyeballs it's good enough. Here is a key structure point in the market. Until price breaks that area, I'm very much so sell bias. Anything else would be an aggressive type of long position. And I recognize that it's going to be a reversal position as a result of all higher time frame bias guiding the short position. Now onto the 15-minute time frame, it looks quite okay. Lower low created in the market. Where's that lower low come from? We seek to push price back towards the highs where we can understand where it's come from. And then we have this key structure point just here. So as I've mentioned, until price breaks are there, I'm very much so, at least, even on the 15-minute time frame, still sell bias. So if I take any opportunity long, it means it's an aggressive position straight out of the bat. And I need to understand that, manage my risk accordingly, and move my position to break even as soon as feasibly possible. So team, quick 20-minute breakdown for the morning. I hope you're all doing well indeed, and enjoy the sunshine. You shall hear from me soon. Have a great trading day. All the best. Charles.